How much time do you spend on day trading every day?
Well, the key thing is that I spend about 2 hours in the morning analyzing the markets. This is the most important factor because that's when I'm unemotional. I don't have positions on usually, so I can be completely objective. I look for trade opportunities and then I put them in a spreadsheet and then I'm set up for the day. I find this method removes the emotion from the trading.
Mhm.
So I find that that's the best way to prepare every trade. So I know exactly where my entry is, my stop loss, my target. It's on a spreadsheet. Only then, when I've done all of that, that's when I enter the orders into my trading account and just wait to see which orders get executed.
Okay, so it's only 2 hours in the morning?
2 hours maximum, but that's because I'll look at 25 forex markets, gold, silver, oil, and 3 US stock index futures. So
Okay.
there's a heck of a lot of markets. So that's why it takes 2 hours for me to extract all the key trade levels that I would be prepared to execute.
And when you were, let's say, a junior or a beginner trader, how long did you trade per day? How
Well,
many hours?
the thing is, when I started trading, I was on the London International Financial Futures Exchange. So that was a very exciting open outcry market where we're standing in hexagonal pits, shouting, screaming, waving, using hand signals in order to trade. So the exchange would open at around 8 a.m. For that 8 hour period, you're not allowed to sit down. You have to stand up in the pit. You have a trading jacket on, brightly colored trading jacket to identify yourself with other traders. You're standing in the pit waiting for the business to come to you. I was a market maker, so I was waiting for the brokers to come into the pit to execute their orders, and then I would try and do that. That was how I got my edge.
Okay.
I would give what was called a two-way price, a bid and an offer. A bid price at which I would buy, and an offer price which was higher, 2 or 3 pips higher, at which price I would sell. That was called my edge. If I could buy at the bid and sell at the offer, then I would make a profit.
Okay.
So that I would stand in the pit for 8 hours a day.
How many hours a day should a new trader spend?
A new trader should spend as long as possible, really, in front of the screen. That's not necessarily executing orders, but it's watching the price action, practicing the technical analysis tools across different time frames, across different markets. A new trader might only decide that he or she wants to trade just one or two markets. So, for example, he might trade the euro, US dollar, and gold. But there's no harm in looking at lots of other different markets just to practice your technical analysis techniques. Of course, like in everything, practice makes perfect.
It's all about practicing at the beginning, right?
Practice, practice, practice. Like everything, whether you're a sportsman or whatever job you want to do, even just learning to drive a car, it's all about how much you practice.
Were you a trader when there was the internet bubble around 2000?
I was trading when we had the internet boom around 1999, 2000. I was following it quite closely. I actually was trading stock markets at that time. I moved on to Forex markets later. So I was very involved in that, and I watched the stock markets crash as the internet stocks imploded.
You were a trader when there was the crisis in 2008?
I was trading the global financial crisis in 2008. In fact, I watched Lehman Brothers collapse live on television from Dubai. I was staying in Dubai at the time. So this was a really interesting period for me because I actually predicted that this would happen from my technical analysis. And I wasn't that experienced, of course, back in 2007. I've now been doing it for nearly 20 years. But even back then, I'd learned the patterns. And there was a very clear head and shoulders pattern. This pattern indicated that the stock markets were going to have a significant move to the downside because the pattern was built up over many, many months. So it was a huge, significant pattern. And I had customers such as Deutsche Bank, Morgan Stanley, Merrill Lynch, and I told them that this pattern indicates that there's going to be a stock market crash. And they were unaware of it. They did not see any signals that would indicate to them that there would be a stock market crash. And of course, it did happen. It led to the global financial crisis, the banking crisis. So to my customers, I looked like I could tell the future.
I heard you can bet on the fact that the market will decrease. Can you explain this?
Yes, traders can bet that prices will go down as well as up. So everyone understands that when you want to invest in a stock, you sit back and you hope that the price goes up. But what traders can do is they can go short of a stock, which means in effect, they borrow the stock from someone who owns it and they must therefore give it back to that person. So they borrow it at a price and then they hope that the price of the stock will fall, which means they can then buy the stock back and then give it back to the person that they borrowed it from. Some hedge funds focus on shorting stocks. They look for companies that are vulnerable and they short the stock in expectation of a price move to the downside. And actually, some traders have been doing that in Tesla lately because they believe that Tesla was overpriced. They shorted the stock, and recently that's actually paid off because Tesla has been moving down. Forex traders can also short the Forex market. You can short gold, oil, commodities, stock indices. I would say all financial products can be shorted, which means that you sell to open, hoping to buy back at a lower price.
Your advice for a new day trader is to trade only something that he understands.
I would definitely advise day traders to trade things that they already are familiar with. So say, for example, you live in the UK and you're used to going to Spain for your holidays. Well, you're probably aware of the pound versus the euro exchange rate. So that might be something that you might want to trade because you're probably familiar with the price.
So do you trade gold?
I do trade gold. Gold is one of my favorite markets. I find it easier to read. It's probably one of the most popular subscriptions that I offer. And I provide a report on that every morning, delivered by about 4 a.m. with buy and sell levels and a very detailed analysis. I don't know why gold is one of the best markets. It may just because I have a lot of experience in trading gold, so I have a very good feel for it. Traders do find that they get a good feel for a market. They have a good instinct for a market when they've traded it for a long time.
Do you see some increase in gold when there is a crisis or something like that?
Gold is considered a safe haven, which means that when there is a crisis, maybe a stock market crash, a war, investors tend to put their money into gold because it's seen as safe.
Can you describe your routine when it comes to trading gold?
So when I start off in the morning looking at the gold market, I tend to look at the 4-hour chart because that gives me a really good perspective of what's been happening over recent days. And of course, when I wake up in the morning, I've missed about 8 hours of trading. So it's a good overall picture of what's been happening recently. And I already, of course, know what I was expecting to happen. When I look at the 4-hour chart or the 1-hour chart, I can see, did gold do what I expected to do, or were there some surprises that I need to investigate? I don't really focus on gold fundamentals. I don't really look out for specific news for gold. As a technical analyst, we believe that when news is released, it's automatically absorbed by all the market participants who need to react to it. So if there is some news that, let's say, Russia is increasing their gold reserves, traders will read that, and anyone who needs to react will react immediately, and therefore the price will automatically reflect the news in the market.
Okay. Can you comment this sentence that says, by the rumor?
Yeah, buy the rumor, sell the news is a really important saying by traders. I heard this 3 or 4 decades ago when I started on the London International Financial Futures Exchange. What it means is when there's a rumor about something that's going to happen. So, for example, let's say that there's a rumor that the Microsoft results are going to be really strong. Then investors will start to buy Microsoft in expectation that they will announce good profit figures and that stock will go up. But what often happens is the stock goes up before the event, and when the actual news is released, anyone who wanted to buy Microsoft has already bought it. When the news comes out, all the investors have already expected the good news. Then the investors think, oh, I need to take my profit. So all at once, the investors start to sell after the news has been released. So oddly enough, the stock actually goes down when the good news has been released because, of course, it was already expected. You often find that when economic numbers are released, so for example, today is the first Friday of the month, and the US will release the non-farm payroll, unemployment and average earnings numbers. And now if traders have already expected there to be a strong employment number, maybe based on previous releases, then they may have already bought the dollar, and they may have already, for example, bought the stock market in anticipation of the announcement that there's been greater than expected number of jobs created. But if that's already been anticipated by the banks, by the time the number is actually released, which is usually 1:30 p.m. UK time on the first Friday of the month, those investors that had anticipated that and are already starting to make a profit on their position, they will quickly want to sell to take the profit. So what you might find is a good number is released, there's a very sharp blip up, but then suddenly the market reverses and plunges very quickly as all those traders who already had positions on before the release of that number exit in order to try and take their profit. So it can be quite an odd phenomenon. You get a strong number, but then the market collapses.